I think, and you hit it right on the nail in the sense that there's been two drivers of gilt yields. One has been external and one has been domestic. This UK CPI print is a great news for the yield market and for the UK more generally. It relieves the pressure on fiscal finances, but it also allows the central bank, the Bank of England, to potentially cut rates as soon as February, perhaps. Now, the external side of the story is also important. I mean, the big driver of this sell-off had been higher US yields. And we know that that has two components. This is really important because most people think it's just about the repricing of the Fed because of sticky inflation and stronger growth. But it's also about the term premium, all the uncertainty that we're seeing about macro, geopolitics, policy, and that won't go away so easily.
You know, if you're comparing the 10-year gilt yield with what's happening over for the 10-year Treasury, at the moment, and we still have them on the screen, I believe, we are looking still at higher numbers over here in the UK compared to what's happening in the United States. Draw for us a comparison going forward for the rest of the year. How do you think this pair is going to be trading going forward, given perhaps the different pressures on the Fed and on the Bank of England?
Yeah, I mean, it's hard to say exactly, but what I would say is that in the case of gilts in particular, the October budget didn't really reassure investors significantly, but the global context at that time wasn't as bad as it is for bonds. So now we're having basically a significant sell-off, as we said, in the US. And when the global bond market is under stress, it looks for vulnerabilities. And the UK was seen as a vulnerable place because growth has been very weak and because the budget didn't really reassure investors as much as the market would have liked. So that means that, of course, the fragility is still there. So it hasn't gone away. But this prospect of lower yields at the front end, if the central bank can cut rates, and potentially some reassurance, even more so from the Chancellor, that they are going to comply with the fiscal rules is going to be good news for gilts. Longer term, some of these yields are really, really interesting. So I would like to make that point. We're still in this bull market for bonds. Let's not forget about that.
So tell us about the positioning then. Where do you think are the opportunities at the moment?
Well, I think at the front end in the UK clearly is a safer place, and these yields are really, really interesting. For the longer end, you need to be a bit more patient, and you have to be mindful that it's not just about the front end assessment, and not even just about the fiscal outlook. It's also about the uncertainties that I mentioned: global policy uncertainty, geopolitics, fiscal, etc. Not just in the UK, but also in the US.